Hey guys, welcome back to the channel. In today's video, we are going to talk about liquidity, starting with the definition of liquidity, places we can spot liquidity on the chart, and how we can equally map this liquidity out before we pick entries. All right, so if this is what you're interested in, please stick around while we dive straight into the video. So let's go to the chart. Okay guys, let's start with definition of liquidity. What exactly is liquidity? Liquidity refers to price levels where pending orders and stop losses are clustered. Or let's put it in the most simpler terms, liquidity means money where funds are located in the market, so where retail traders place their stop losses and their pending orders. All right, who are the retail traders? Retail traders are people like you and I that comes into the market with our personal funds and funds that cannot really move the market. Right, these are the retail traders. We have retail traders and we also have institutional traders, which are the market makers like the banks and institutional traders. These are the people that actually move the market because they come into the market with huge funds. I'm talking about millions and billions of dollars. These are the people that actually manipulate the market and move the market. All right. So how can we spot these areas on our chart? We have like 4 to 5 places we can spot liquidity. Let's start with the first one, which is support and resistance zone. Okay, so this is support and resistance levels. This one up here is a resistance level, and this one beneath is what is called a support level. Retail traders have come into the market to sell on this support level, placing their stop loss just a little above this point. And there are also people that come into the market believing the market is going to push higher, placing their buy order here, and some have also picked an entry here, placing their stop loss just beneath here. The liquidity we are talking about is this. The market makers believe that retail traders have come into the market with their money, placing their stop loss just above here. And some retail traders have also come into the market, placing their stop loss and their pending order just below this support level. So the market makers want to manipulate what is happening here. They want to take out people's stop loss that are resting above here, which is people's money that are resting above here. And they also want to take out people's stop loss that are resting beneath here. Okay, so when they come into the market, they want to push price higher to take out all the liquidity, to take out people's money that are resting here, before pushing price to the downside like this, right? So with this, they've successfully swept all the liquidity that were resting above here, and they've also swept all the liquidity that are resting below here by pushing price first to the upside, then dropping it down to this point. So as this price is coming down, it's also sweeping the liquidity that are resting below this support level here. All right, so let's go to the chart so we can have a clearer knowledge of this. Okay, you can see here, this is support and resistance level here. Let's start from here. This one and this one here. So first of all, the market acted as if it was going to push lower here, right? But retrace up a little to this point, pushes to the downside, and now it's coming back up again to this point. What the market makers are trying to do here is to pile up liquidity, because people will believe that this market is going to drop lower, or some will believe the market is going to push higher when seeing this kind of formation here, right? So the market makers believe that liquidity are resting below this support zone, and liquidity are also resting above this resistance level here. Okay, let me use this to illustrate. So we have liquidity here, which is money. We have money here, and we also have money below here as well. Here, even this one here. Okay, so when they come into the market, they want to manipulate what is happening here. First of all, you can see here, they took price all the way up, taking out the money or the liquidity that we're resting above this resistance level here, swept all the liquidity that we're resting here before pushing price to the downside. Okay, as they are pushing price down, they are also piling up another liquidity here, right? They pile up another liquidity here, pushes price a little to the upside, making people to believe that it's going to push higher. Now look at what they did finally. They took the price all the way down, sweeping all the liquidity that were resting here, and even this one, before dropping price to the downside. Okay, so when you see this kind of formation, you know that the market makers are trying to engineer liquidity by making people to believe that, or by making retail traders to believe the market is going to push higher, and some believing the market is going to push lower. They will place their stop loss and pending orders here and here. So when the market makers come into the market, they want to manipulate what is happening up here, and they also want to manipulate what is happening down here. So this is the first way we can spot liquidity on our chart. So let's look at the next area we can spot liquidity. We can spot liquidity on equal high like this, which is called a double top. And we can also spot liquidity on equal low like this, which is called a double bottom. So the market makers want to engineer liquidity by giving us this kind of formation. This is the first, and here is the second. Okay, so some people will place their stop loss above here, expecting the market to push lower. So what the market makers would do here is to push price above this high, taking out people's money that are resting above here, taking out people's stop losses and pending orders that are resting above here before they push price to the downside like this. Okay, now let's look at a double top or equal low. So the market makers want to engineer liquidity here by creating this kind of market formation. The next thing they would like to do is they want to push price lower because they believe people have come into this market. The retail traders have come into this market, placing their stop loss just below here. So they want to push price all the way down to take out people's stop loss that are resting here before taking price to the upside. So now let's look at this kind of formation on the chart. Okay, look at this one here. We have this here. We have double top here. And we also have this here. Double bottom, or you can call it equal low and equal high. Okay, so let me use this dollar sign. So we have liquidity here. We also have liquidity here. We have another one here below here. And we also have another here. So there are people that come into the market believing the market is going to push higher. while some seeing this formation believe the market is going to push lower, right? But this is the market makers or the smart money is trying to play with retail trader psychology by making some to believe the market is going to push lower. Some believe the market is going to push higher. So what they will do is to push price all the way up to take out people's money that are resting above this equal high. So you can see here, they push price all the way up, taking out people's money that are resting here before pushing price all the way down. You can see the momentum this candlestick carries to push price all the way down, taking out people's money that were also resting below this equal low here. Now let's look at another one. So another way we can spot liquidity is on recent highs and lows like this now, pushing price something like this. So first, market created something like this. There are people that actually came into the market here, placed their stop loss just beneath this point, believing the market is going to keep pushing higher. But the market came all the way down, pushes all the way down, taking out stop loss and people's money that were resting here. Okay, so after taking out people's money that were resting here, we now see a retracement. Okay, this retracement is to engineer another liquidity. Now let's bring this dollar sign here. So this little retracement or pullback will make some people to believe that the market wants to push higher. So they will pick an entry here, place their stop loss beneath here. Then the market will come all the way down to sweep the liquidity that we're resting here. Okay, so same applies to an uptrend where price will first give us this kind of movement. Retail traders will believe that market wants to push lower, so they will pick an entry here, place their stop loss and pending order just above this point. So the next thing the market will do is to push all the way to the upside, taking out stop losses and pending orders that were resting here before retracing inward like this. So with this, the stop losses and pending orders that were resting here have been taken out, giving us this recent high. Okay, so this recent high now, people will also come into the market here, believing the market will continue pushing lower, but you will see the market makers pushing price again to the upside. As price is pushing higher, it's also taking out people's money that we're resting here. Now let's go to the charts. You can see here, this was a recent high that price created. It came all the way up to take out liquidity here. After sweeping liquidity that we're resting here, it started pushing to the downside. Even as price was making its way up, it was also trying to engineer liquidity down here. Have you seen? So immediately price push all the way up, taking out people's money that were resting here. It came all the way down, sweeping the liquidity that were resting here as well to trade to the downside. So how can we spot liquidity when we are trading? You can see here, what the market is doing here is trying to pile up liquidity, right? So after piling up this liquidity, it drops all the way down. Okay, so here we have a break of structure. Here we have a break of structure. So we want price to come all the way up to this origin that caused this break of structure here, right? Let's map this out. You can see here. So even before price got to this zone here, price engineered liquidity here. Here. Acted as if it was going to push to the downside to give us another break of structure, right? This was another liquidity here. After engineering liquidity here and here, price pushes all the way up, tapped into this origin here. Do you understand? Tapped into this origin before delivering to the downside. Let's see how we can spot liquidity before picking an entry. We had a break of structure here, right? And this was the origin that caused this break of structure. Let me map this out. So this is going to be my point of interest here. And you can see even before price tapped into this origin that caused the break of structure, look at what happened here. Price tried to engineer liquidity here by giving us a double top or equal low here. Here. Another one here. So people actually came into this market, placed their stop loss and their pending orders here. But look at what happened. Price pushes all the way up, swept the liquidity that we were seeing here, tapped into this order block here before delivering to the downside. Okay, now let's go to another chart. Okay guys, let's look at this one here. First, we have a break of structure here. And this is the origin that caused this break of structure. This one here. But before price got to this point, look at what price did. Price engineered liquidity by creating an equal high here, which can also be called a double top, right? Let me bring the dollar sign here and here and here. So see this kind of formation, some people want to pick an entry here as price is retracing to this zone here, right? So some will place their stop loss here, pick an entry here, then place their stop loss just above here. Some will also place a sell order here, expecting the market to trigger them in when once price gets to this zone. All right, but now look at what price did. So the liquidity that we were seeing here were swept before price tapped into this origin here and delivers to the downside. Okay, we can also spot liquidity on a trend line, but this video is already too long. Okay, so these are ways to spot liquidity. If this video was helpful, please consider giving it a thumbs up and subscribe to the channel. Thank you so much for watching. See you guys in my next video.